Good morning. Today is September 17th, 2025, and it's a special day today because of the Bank of Canada rate decision. And I'm wearing my lucky jumper. If you guys ever watched Ted Lasso, yeah, it's the jumper from that show. So let's do the recap first, and then I'll go into predictions right after. So first of all, the TSX did close by negative zero point 0.4 yesterday. It's not the worst as because we did have record breaking for the last week and a half or so. The leaders were energy and tech. Losers were healthcare and materials. But one important thing is there was a 10-day high on the Loonie because of factory data and obviously the Bank of Canada rate decision. So overall, things are balanced and it's very calm. It's not just because of what's happening in Canada, but it's also because of in anticipation of what's going to happen in the States as well. So pretty much both sides of Niagara Falls, there's going to be a rate decision today, which is super cool and super vital. Bond yields did fall around 2.8, the 2-year around 2.86, 5-year around 2.77, and the 10-year around 3.16. So pretty much there's bond yields are trickling down slowly, but that also means in the next 2 to 4 weeks, the fixed mortgage rates are going to be coming down as well. So for a lot of people who got scared about rate shocks and rate surprises of their renewals, this is a little bit of hope that they may get a better rate in the near future. Today I want to focus on Peel region. So Peel region, the asset sale ratio for the last 7 days was 1.024. That pretty much means if it was $1 million they listed it for, they sold it for $24,000 over asking. Again, after what we saw in the last 3-4 years, that's super calm, super normal. Because if you remember, in 2022, houses were going over 200,000 over asking. So 24,000, we can let it pass. Average sold price was about $1 million. It did come up by 3% from the previous week. Listings to sales ratio is personally my favorite indicator. It's still at 19%. So that means it's a super buyer's market right now. So when it's a buyer's market, a lot of people can get a really good deal right now if you're a buyer. Now, new listings are down by 11% from the previous week. However, from the previous year for this week, it's down by 9%. So both indicators are very much showing that people are not selling in a fast pace. But the other data I want to talk about is the power of sales. So there's about 9 homes that are in power of sale in Peel region right now. So yesterday when I looked at York region, it was 7 homes, 7 days. This is 9 homes, 7 days. So take it as what it may, but that's an indication that maybe there's a lot more power sales in Peel region right now. In CPI data from yesterday, I want to also talk about the CPI data from StatsCan, which rose by 1.9%. Which is good for August. However, comparing to July, which came to 1.7%, not so good. But core inflation did come to 2.4%, steady. Gasoline did come down by 12.7% year over year, and that's majority of it because of Carney taking out the gas tax. While carbon tax. Meat prices did jump to 7.2%. And overall, food still squeezes our budget, but soft inflation gives more reasons for the Bank of Canada to cut its rates. So now let me get into the Bank of Canada. So after CPI, the overnight data, the overnight swap index now priced in 93% chance of a rate cut by 25 basis points for today. And the market also priced in a cut by March of next year as well. And finally, most importantly, there's a 96% chance that it's going to be continuous cut until 2026 because current overnight rates are around 2.75%. And why this matters importantly is because it doesn't just affect the mortgage lenders and brokers and borrowers, not just the mortgage industry, but also affects businesses, small and big businesses alike. The next thing I want to talk about is the currency. So 10-day records are being broken right now mainly because of manufacturing, which went up by month over month by 2.5%, and oil did go up as well. So this means as the Loonie goes up, imports are getting cheaper for us as citizens. However, it's kind of concerning when we are exporting to overseas, because then our stuff gets pricier. So exports market are going to be affected, but imports are going to be not as affected. So inflation will come down for us, I guess. Right? Overall, it's going to be a monumental day today, and everyone is anticipating, because I am getting phone calls from other lenders in anticipation of what's going to happen today, just to pick my brain. And we are all guessing, and we are all anticipating of what product strategy we are going to bring in moving forward after today. And the other thing I want to talk about is also a buyer in Brampton was initially, the realtor was initially showing them townhomes and semi-detaches, but because of the current market and the current situation, they were able to buy a detached home for almost the same price. And that's phenomenal, because it's a short-term pain, long-term gain, and they were able to move in to a better home in a better area. And it was a great moment for all of us when we were able to fund that deal for them. Even though it was equity-based lending, everyone was happy. And that's it for today. Enjoy your day and keep an eye on what Tiff Macklem says.